Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Aman Dabash, Nikunj Dalmia in the studios. And it is a wobbly global setup this morning. That's going to definitely push us back. Having said that, I think we preempted what the global jitters are going to be overnight on the back of escalated geopolitical tensions and worries. Because remember, yesterday we ourselves fell to the session lows, even breached that 19,700 print yesterday, led of course by banks, which we'll talk about in just a bit. But that's the global picture for you on your screens this morning, wherein the 10-year yield in the US is now at 4.9% and it's at a 2007 high already. So that said, it's quite the red color, Nikunj, across the global screen, and I'm just looking at Asia, 1 to 1.5% cuts. Similar is the case with the US equity markets as well. It was all bleed red.
You know, you would say that what we saw last night was the classic risk-off. We've not had this risk-off.
Yeah.
We've not had this risk-off after what's happening in the Middle East. And it was an ugly day for the bond market. Now, if this ugliness or if this pattern continues in the bond market, then you would say that global markets which did not react or which did not react to geopolitical tensions, maybe they're reacting late. Now that's the setup for you for the equity market, Dow, Nasdaq, S&P. It is not a very scary fall, but the fact that the 10-year paper is now nearing 5%. I mean, 5% is something which we've not seen in a long time. So the difference between 4.9 and 5 could be 10 bips. But in terms of market psychology, a lot changes. And this is where we stack up. S&P is actually flat now. Brent is up 7% and the dollar index is up 0.5%. So is this a late reaction to what is happening to geopolitical tensions, or this is just a risk-off phase markets are going through? Very difficult to fathom. But yes, as we walk into trade this morning, you will have to deal with global cues. So that's a big cross, I guess, the bulls will have to carry this morning.
Yeah, absolutely. In fact, I just want to look at the GIFT Nifty implied open as well, because that too, in addition to the price action for our markets yesterday, is also indicating quite a bit of weak start. And I guess, it's pretty much par for the course. We're prepared for it, Nikunj, that it's going to be banks which are going to be leading the fall, as was the case yesterday when we did break that 19,700 mark. And there you go. It seems like it's going to be a sub 19,600 start for us.
So Aisha, in my book, the market will still qualify as a market you want to buy on a decline. I don't think we've decisively broken down. Yes, you may look back and say that, okay, I wish the markets would have gone above 20,000. I wish markets would have made a new high. I wish markets would have, gone slightly. Nifty would have got a little bit of support from HDFC Bank and Reliance. But unfortunately, that is not the case. I smack there is an element of compulsion. And that element of compulsion, I think, is clearly visible in the way how large cap banks are moving. Even though numbers are not bad, valuations are not that stretched, everyone is surprised, including me, that why banks have just not participated. So this is what we have in terms of the trade setup yesterday. Nifty has seen long unwinding, but fresh short positions are getting added in the bank Nifty. So are we going to go through that phase once again where Nifty slips back into a range and the bank Nifty starts adding short positions, and the leadership in the market which we all were expecting and anticipating, I think that just vanishes completely. So the technicals are looking sticky. The technicals are not showing signs of fresh momentum or fresh trend built up. So the word trend, I guess, in the market is missing. And yesterday we did see profit booking in some of the the so-called small stocks also. So the stocks which are dominated and in a sense patronized by retail, by day traders, by hand-on-heart traders, they also started really reversing. So a sizable correction in PSUs has kicked in. Railway stocks have reversed. Defense stocks are exactly not moving in a good groove. So the market has not reversed. The trend is intact, but either you're going through a dry patch or you're going through a phase where it will just get slightly sticky.
Yep, and that resistance around the 19,840 to 19,850 mark, it seems like that's what we're seeing. Of course, you have a lot of the heavyweights that have been under pressure, largely the likes of an HDFC Bank, for instance, Bajaj Finance and ICICI Bank. Yesterday's trading session saw some of these top performers within the banking space really buckle under pressure. Pharma, on the flip side, though, seem to buck the trend. And as you said, yes, it's been some of those small mid-cap stocks that at least in yesterday's trading session fell more than the Nifty. But it's also critical to monitor the kind of earnings roundup that we've seen. We're in the thick of the earnings season. There's Wipro, and that came out with numbers, and that pretty much was weak. LTI Mindtree, a decent set of numbers. And for IndusInd Bank as well, it's been in line. And yesterday, it was a solid performance from a Bajaj Auto, Nikunj.
Yeah, so I'll start with you had 4 Nifty 50 companies which came out with numbers yesterday, and today you've got the entire FMCG brigade, so to speak. You've got HUL, ITC, the entire FMCG space. What is the scorecard looking like? Let's look at the scorecard. I think that in a sense, let's revisit it actually, and then we'll talk about 2 numbers, and then we'll take the conversation forward with Anisha. I think Wipro, nobody was expecting anything. LT Mindtree, we'll discuss with Anisha when she joins us. Let's focus on IndusInd Bank and Bajaj Auto. Bajaj Auto. Now, nobody was expecting good set of numbers from Bajaj Auto, but they've delivered, and more importantly, the margins have gone up. And the management, whatever they've indicated, they're confident that the retail demand could actually make a comeback, and they're talking about a 12 to 15% retail demand coming back because of festival season. Bajaj Auto has done rather well for itself. The arbitrage between Bajaj Auto and Hero MotoCorp, I think, is now visible. Bajaj Auto has hit a fresh high. Hero MotoCorp is still languishing at the bottom of the barrel. These numbers are indicating that things are looking up in the domestic market for Bajaj Auto, and the three-wheeler strategy is kicking in along with electric vehicle. But export, I think, is still the bugbear. Until the time the export things do not stabilize for Bajaj Auto, you cannot really come up with a very rara outlook. The advantage for Bajaj Auto is that it's cheap. 18, 19 times, 1 year forward, the downside is limited, and the upside, I think, would be a function of what's happening there. IndusInd Bank, numbers are in line with the positive bias, decent management commentary, and the MSCI inclusion. So the stock could remain warm. But with banks, numbers are just not mattering right now. It's compulsion of technicals which are at play. So I don't think that IndusInd Bank, even though numbers are in line with marginal beat, you will actually see a big upside. Bajaj Auto, I think, becomes a re-rating candidate given what they've delivered.
Yeah, absolutely. It's a mixed bag, lots to react to. But here's a long winning streak in Team India has clearly now been eyeing its 4th win on the trot. In fact, in 2023 edition of the Cricket World Cup, the men in blue are all set to take on Bangladesh in Pune. In fact, the team, of course, is looking promising. However, India has been in commendable form in the mega tournament so far. Remember, India will be high on confidence after defeating the mighty Australia, Afghanistan and arch rivals Pakistan before their arrival in Pune today. But let's just rewind and tell you in the Asia Cup what really happened, where Bangladesh actually beat India by 6 runs. So it's going to be quite interesting to see how this game actually pans out. The India-Bangladesh clash has always been quite the neck-to-neck competition.
The small caps are doing better in markets, and unknown.
We are not small cap.
No. In the market, small cap stocks are doing better, and 2 unknown teams have defeated the giants.
Yeah, you're saying the dark horses have
been. But Bangladesh is neither a small cap. They beat us in Asia Cup, nor are they unknown.
Yeah, but the odds are that it's going to be a cakewalk. So all I'm saying, never say never. It's cricket now.
Okay, but let's talk about the more predictable one, the global setup this morning with the spike that you're seeing in the yields. What's the global commentary like? Vinny's here to highlight all of that. And Vinny, I guess it must be quite soured out there, the sentiment.
Absolutely, because the commentary continues to surround around those inflation concerns that are there. And, we have a lot of commentary coming in from Federal Reserve side, and Federal Reserve Governor Christopher Waller, firstly, the comment is from him. He's talking about the US Central Bank. He said that, maybe they could wait a bit, see what the signal indications are coming in terms of the inflation, and then maybe look at maybe taking a hike in terms of interest rates, or maybe wait out a bit before taking the rate hikes as well. That is in the next meeting. He's signaling that he favors in terms of holding the interest rate steady when the officials will be meeting in the next 2 weeks. So that's the word coming in from him in terms of the interest rate hikes as well as inflation. Now, in terms of the other commentary we have is coming in from Federal Reserve Bank's New York President John Williams, who is highlighting that the interest rates will stay at these restricted levels for some time, maybe to bring down the inflation back to the 2% target that they have over there as well. And it's a sticky situation as of now to meet and achieve that goal of 2% as well. So those concerns are still there. He believes that those high interest rates will still last. That's the word coming in from most of them as well. Even Fed's Bowman is also highlighting similar things, that inflation has come down a bit, but still in terms of the target that they have of 2%, it's still higher on that front, and they still have to take measures to meet that inflation, still high inflation, and they will be focusing on returning to that 2% mark as well. So let's keep an eye out on what the decision comes in. But as of now, seems like most of them are looking at that interest rate, or maybe holding that interest rate. That's a factor that one should watch out for. Peter Schiff, in terms of commentary that has come in terms of interest rate as well, he said that these interest rates will remain higher for a longer period of time, given that inflation is remaining at the higher level as well. So higher interest rate is something that will be continuing for a longer period of time, and that means that coming to the recession, that will be a deeper recession, and that could last longer as well. So that's a concern he's highlighting, and this is not just going to be stagflation, but an inflationary depression is what he's highlighting. So his saying is that buy gold before the moon shoots up. So that's the word coming in from him as well.
Right, okay, let's bring on board our chartists as well, Kunal as well as Naresh, and find out what they're making of the trade setup this morning, considering it's quite the weak handover. Naresh, hi, morning, and weak it was for us in the dying minutes of trade yesterday as well, looking at the way banks panned out. You think further weakness today, and that's inevitable?
So the weakness could be there in the opening trades, but again, after a gap down of say 100 points, maybe we could again pause out. So we stick into this range, 19,400 on the downside, 19,800, 850 on the upside. So closer to 19,400, 500 should be a pause. As of now, none of the heavyweights have a technical structure of a major trend as of now. And what is interesting is yesterday we hit a new all-time high on a Nifty small cap 100. BSE small cap index almost went back to the same highs. The mid cap and the small cap indices continue to remain relatively better. The heavyweights in the Nifty, we did not see any follow-up buying on Reliance Industries. HDFC Bank continues to be at 1500, 1550. And then you have IT also. So that makes it roughly 40% of the index with no real trend. So we continue to have the same view. Will be stuck in this trend of 19,400 to 19,800 for some time.
Kunal, good morning.
Hey, good morning, Nikunj.
कुछ नहीं हो रहा market में.
Well, yes, Nikunj, कुछ नहीं हो रहा है, and I think the worst part is that the Nifty is actually mirroring the performance of Nifty IT and Nifty Bank combined. You look at I was looking at the price performance from the 15 September highs for the index when the Nifty was at 20,200 odd levels. And from there, the Nifty IT and the Bank Nifty has actually underperformed by a margin of 5%, or they've corrected by more than a 5% kind of a margin for themselves. And the Nifty is down 3.5% from those levels. So that clearly indicates that the major weighted indices, the Nifty IT and the Bank Nifty, which are part of the Nifty 50, they are acting as heavy on the indices. Yesterday, the critical part was that the Nifty IT as well as the Bank Nifty have come back towards a major swing low. I think they are just about 0.5% away from a major swing support for themselves, and I think that could be an added concern for the Nifty, because if there is any incremental amount of weakness in the Nifty IT as well as the Bank Nifty, it could have a strong resultant pressure on the Nifty as well.
Okay, let's talk stocks then. Kunal, given the kind of pressure that we saw on banks, are they shorting candidates this morning?
Well, I'll just wait out for a confirmation in the first half an hour, first 1 hour for the Bank Nifty, but I'm initiating one buy and one sell, which are from the non-banking stocks. The first one is from the auto pack, which has apparently been a more resilient pack as such. Tata Motors is the first stock which I would suggest as a buy. The stock looks quite attractive on a short-term basis. 688 as a target, which I would eye on the stock. Stop loss at 655. And Birla Soft apparently is showing signs of a top-out formation on the daily charts, a double top on the daily time frame, so would suggest as a sell. Targets of 528, stop us at 560.
All right, Naresh, let's get in a sense as to what's looking good on the charts. What are you picking out for this Thursday morning?
So being a little defensive, first is a buy on Sun Pharma. The stock has been in a tight range of 50-80 points for the last couple of months and is on verge of a breakout above that 1160-1180 mark. And why is this 1160-1180 mark crucial? This is the high the stock made in 2015. So for the last 8 years, the stock return is zero from that point. And if it can cross above those levels, that could be start of a new uptrend. So looking at it as a possible uptrend, which could be structural and multi-months. So preempting that with a stop loss at 1120, a target price of 1250. Second is a buy on Motilal Oswal. We are seeing good trend across the AMC as well as the broking space. Out here, Motilal Oswal also gave a breakout, a cup and handle breakout above the 980,000 mark, sustaining above those levels. Also, the stock has been a major underperformer for the last 3 years. Stock is on verge of a multi-year high. So expecting this to be a trending stock going forward. A target price of 1200, stop loss at 950.
Okay, let's now discuss all the stocks which are going to be in news as well this Thursday morning. Anisha is here to flag off two sets, and Anisha, quite the surprise and respite, if I can say that, amongst the IT pack, looking at LTIMindtree's numbers.
Definitely an outlier versus the pack because, of course, it's not a blowout number, but at least the company has managed to meet the expectations and beat it on a very slight basis, especially on the top line itself, while rest of the companies have clearly disappointed. LTIMindtree managed to report a constant currency growth of 1.7%. Street was penciling in a number of 1.4%. So there's a beat there. Even if you look at the margin performance, the margin has been actually resilient across the board from the IT companies for LTIMindtree as well. Despite the wage hikes that the company has institutionalized, we have seen that the margin has come in at 16% versus the expectation of 15.5%. So a good 50 basis point beat, and that is trickling into the bottom line as well, because we are looking at a PAT figure of 1160 versus the expectation of 1120. More important is actually the commentary coming in from the management, and they're quite confident of a stronger H2. So they are saying that the deal wins that they have done in the first half of the year will start ramping up, and they are saying that the second half of the year is going to be much stronger than the first half. And Street is of course very hopeful of that, because if you go by the current run rate, the company will not be able to achieve even the high single digit kind of growth that people were penciling in. LTIMindtree last time had told us categorically that double digit is a tall ask. It's not going to happen. But then the question was, will there be at least 8 to 10% growth? Non-committal on that, but nonetheless, Street is hoping for that. The valuations of LTIMindtree still remain towards the edge of the mid cap rather than the large cap. So the stock has got it added into the large cap and Nifty category, but the valuations still remain close to that 30 times forward earnings if you look at FY24, because the growth was faster than rest of the IT companies. But now let's see how it performs. It was going weak into the earnings, Nikunj, but I'm not sure if it will get that outlier premium right now. Given the fact rest of the IT companies are talking about slowdown, this is saying second half is going to be stronger.
See, if you're buying into large cap IT, you are actually going against the crowd. And I've always said that in the short to medium term, if you're going against the crowd is going to rob you. So yes, you may get one or two outliers here and there, but those outliers may not be so significant. If the trend for IT in the near term is down, if if marquee investors are not really very keen to invest into IT right now, it may just not make a lot of sense to perhaps buy that outlier stock, because the relative excitement in the market to buy IT is not there. And also, if you look at LTIMindtree, Anisha, you track the company more than I do. We are looking at what? Best case scenario, let's say late digit, single digit growth. Yeah. It could be 7 to 9%, or it could be 8 to 6%. We don't know, right? But you are paying a P multiple which is actually north of 20 for a business which is growing at 6 to 8%. There are a lot of businesses in India where companies have got better return ratios, and they are growing at 15% plus, and valuations are in the range of about 20 to 25 times. So it's a toss up. Do you want to be a compulsive contra buyer in IT, or there are better options right now? As of now, I would feel that there are better options in the market. The market is not that expensive that you need to be a contra buyer for the sake of being a contra buyer.
Okay, there you have it. That's LTIMindtree, looking at that space closely. But the other one, and I don't envy Vinny today because it's a busy day for her, 3 FMCG earnings, Nestle, HUL as well as ITC. And of course, we'll be watching out closely raw material pressures, volume growth, competition, all of that and more. Yeah, the big question there, of course, is whether that rural recovery is actually translating into the earnings or not. And the raw material pressures that we were talking about earlier, have they actually eased, and are they showing into the margins as well? Because valuations, of course, for all of these FMCG majors continue to be quite high. So what are they doing to command that premium is, of course, the big question. If you look at the performances of the 3 companies, we are not expecting a blockbuster number for HUL. We are just expecting a 4% kind of growth, which will largely be driven by volumes itself.
Even for ITC, we are expecting a number of almost 4.9% in terms of revenue growth, and volume growth is expected to be around 5%. Nestle might be a bit of an outlier, wherein the revenue growth might be in double digits this quarter, expecting a number of around 12.5% there. Margins are expected to expand everywhere, but the question is how much would be that margin expansion. HUL, of course, the EBITDA margin will see moderate expansion despite the benign raw material costs, because they have higher royalty payments that they have to deal with. The competition commentary will be very important, and rural recovery. For ITC, hotels revenue growth will be important because Street will be trying to assess what will be that demerger ratios and valuations stacking up as per the earnings performance, and of course cigarette, which remains the mainstay of the company. For Nestle, we are talking about a positive operating leverage coming into picture, higher contribution from out of consumption, and commentary on milk and nutrition will be important because milk prices too have been fairly volatile. So Nikunj, again, I think it's a similar story. If you look at the expectations, it's what 4%, 5% kind of growth, and the valuations are what 50, 60, 70 times.
See, HUL has done nothing.
Yeah.
We don't realize it, but HUL in the last 2 years actually has been a flat stock. So valuations are, so the stock has surely underperformed, and ITC has been a massive outperformer, but it is cheap. Nestle is up some 20-22% this year, but it is trading at 64-65 times. So I think if you're really looking at the bent of the market, I mean from a market standpoint, I think ITC numbers are going to be of immense importance. HUL, nobody's expecting any fireworks from there, and Nestle also, I think the stock outperformance is only on the promise that things in the milk basket are coming down, things could look up in there, things really could look up because they are on a cusp of a major expansion. What Nestle has expanded in its entire existence of India, they're looking, whatever they've expanded in terms of the capex commitment, I think they are committing to that kind of an capex commitment in the next 3 years. So what they've done in 100 years versus what they will do in 3 years, I mean, there's a bit of inflation at play here, but numbers are numbers. So that is the kind of commitment they have, and that is the reason why the stock's done well. This is not a basket which will surprise you. I mean, this is not something which is market moving. This is something which will be of good academic interest, maybe upgrades and downgrades, but it's not going to be a market moving number. I mean, from a market standpoint right now, it's global cues, technicals, bank Nifty, and what is happening to the dollar yield. So these numbers may not just do anything.
But Nikunj, if FMCG earnings are not going to do much, IT earnings clearly have disappointed. Financials, we have seen that the performance was okay. The stocks were not getting any positive momentum. Even the large cap bank names, where will that next leg of rally come from?
So why do you think rally is not coming?
Yeah, but like if we do have to
Bajaj
go,
Finance was the top Nifty loser
yesterday.
With
a 30% growth, if you're getting a slide of 3% on the stock, I'm not sure what the street is penciling. And does this mean that we have topped then?
So Anisha, you are still growing at 10 to 12%. Now the scope for P expansion from here is going to be limited and restricted. So now it will be the aggregate numbers, which in a sense, which would be a combination of IT, banks, see, FMCG companies will grow. It's just that these stocks are expensive. So on an aggregate basis, you're still going to get 10-12% earnings growth. Inflation is coming down. The macros are favorable right now. So to expect that we're going to get 50% return, I think is not going to be there. But since the earning trajectory and valuation comfort in large cap stocks is there, from here, given that we come on the right side of what markets want from an election, it will not be a tall order to imagine that you will be in for double-digit return from here till next October, assuming that markets get what they want from the election. That is a binary event, which I'm not so sure how markets will react to.
Well, not a long wait. It's just next month
Can you
itself.
imagine?
In fact, on the subject of some of these earnings, let's hear out what the management of LTI Mindtree had to say about their numbers.
All the opportunities that we have been focusing on and the deals that we have closed in the last 2 quarters, they seem to be ramping up well. But of course, that is offset by some furloughs and some pressures in terms of the cost takeout in the existing book of business as well. We have also baked into the fact that there will be larger than average furloughs, and which is going to be extended beyond BFSI. So keeping all these things in mind, we also have closed opportunities in Q1 and Q2, and all the deals that we have closed, I think they are going to ramp up very nicely in the next 2 quarters. That gives us the confidence that, and there is a significant deal activity right now as we speak, as far as Q3 is concerned, and we expect many of them to close in Q3 as well. So given all those things, the strong pipeline, the deal momentum and the activity, and the deal closures that we had in the last 2 quarters, which are ramping up nicely, we have the confidence to say that H2 will be better than H1.
All right, speaking of earnings, the poor show on the earnings front for Wipro as the tech major has reported lower than expected revenues and profits for the second quarter. In signs of more trouble ahead, Wipro has forecast that Q3 revenue could be at about 3.5% to 1.5%. Let's listen in to what the management had to say.
No major change with the previous quarter. We continue to be in this market with, a certain level of uncertainty that is slowing down, not so much the demand in total, but just the discretionary spend. And we are seeing it across industries. We've seen this pattern for, 2-3 quarters now. And, while we do a strong performance in terms of bookings in TCV, we've won, a lot of new deals. We have won, two $500 million deal, and yet the volume of discretionary spend continue.
Well, coming to you, Aparna, then margins have managed to hold steady. Going forward, given the seasonality and wage hike impact, do you expect the quarter 3 to be a much weaker for margins?
We don't guide for margins, like we are seeing the headwinds play out in terms of a softer revenue environment. You've seen our guidance. There are furloughs. Quarter 3 is a seasonal quarter with furloughs, and we are rolling out wage hikes. So yes, it is going to be a challenging task. We have several measures that have been put in place, and we will try and put up a defense on our margins. And what theory is shared is that we are likely to be range bound in line with what we've delivered over the last few quarters.
Moving to Saurabh, then when will the wage hike roll out, and what will be the level of hikes and variable pay then?
Our wage hikes will be effective 1st of December of this year. We will do it broad-based but selective, based on performance, based on criticality. So we will be doing that effective 1st December. Our variable payout will be in line with what we have done in the previous quarters, although it depends different business units on their performance. But all around 80% is what our employees would be getting as variable pay for Q2.
Welcome back. Let's connect with Sanjeev Bhasin, who's now joining us on the show. Sanjeev, good to have you on board. Let's start off then with the 3 FMCG heavyweights, all set to come out with their numbers. Rural recovery will be closely eyed. Which one is it that you're banking on a steady set of numbers from?
Yeah, good morning, Avan. So I think, ITC may be slightly under pressure because cigarette margins could be on the slightly lower side. Along with that, maybe their FMCG business also shows some marginal decline. But I would bet on Lever. I think Lever has guided on a lower note, but I think they could surprise because the stock has done nothing. And I think that earnings will be, washed clearly. Now, we know that this has been a seasonally weak quarter, but the upcoming quarters become very, very robust. So I think FMCG will now also play as a defensive category along with pharma, given that there is this geopolitical risk. So I would bet on Lever being an outperformer, ITC in line, but Nestle would be my star. It is the only company which is increasing its capex, and they see a lot of visibility going forward. So Nestle would be the star which can actually beat all expectations, and numbers can be better than expected.
Sanjeev, what's leading to some of these large cap banking names to underperform? And I would throw in even a Bajaj Finance there. The numbers were largely in line, but the stock almost cracked 3% yesterday.
Yeah, good morning, Aisha. That is more to do with the sentiment. You will sell what you have. And like you said, Bajaj's guidance, its raising of capital all indicate very, very sweet times going ahead. But, it's the sentiment. And generally, markets price in before the results, a large part of the run-up. So there is always the adage, buy on bad news and sell on good news. And that is what has played out, I think, in the case of Bajaj Finance and some of the other large banks. Particularly HDFC Bank, where we thought the earnings were very much in line. For the first time, you're getting HDFC Bank now consolidated at 2x price to book. And I think that next year itself, you can see profits in the visibility of more than 76 to 78,000 crore. So this is the time to actually be contrarian and buy this large cap bank along with Bajaj, I think, which will be one of the best performing NBFCs going forward.
Okay, lot of other stocks as well, which are going to be in focus today. While, of course, it's the three big boys from the FMCG universe. We're going to be waiting out for their numbers. Keep your eyes out on ITC, on Unilever and Nestle. But steel as a sector as well is going to be focused today. And let's just throw some more light on that. The World Steel Association has cut its steel demand growth estimate to 1.8% in 2023. So, it's important to throw light on how the steel demand scenario in India and worldwide is going to pan out. But Kunal, before we move forward, just a word on how the metal stocks you see shaping up. Because, quite a bit of volatility. One big day move up, 2 days of a downtake and, vice versa.
Well, yeah, Asha, and in fact, the metal stocks have not shown the kind of performance and resilience, even in the last leg of the bull trend, which we've seen ending the month of July, August for the indices. And I think that's the bigger problem for the metal index. But on the other hand, it's not as if that the metal stocks have gone through a very sharp correction. These stocks are very high beta in nature. I think except for Vedanta, which is an exceptional case over here, most of the other metal names like Hindalco, JSPL, even the likes of JSW Steel, larger cap names like Tata Steel, they've been a lot more sideways towards range bound for themselves. Right? I think that's a sign that maybe these stocks require some sort of an impetus or a push in terms of news flow to try and break out of the individual ranges. But the fact that these stocks have also not corrected very sharply, I would probably term this as more of a range bound, kind of a trading band for many of these metal names. So not bearish on the stock, but would wait out for the breakouts to happen individually to take a bullish bet.
All right, in fact, let's take it across then to my colleague Ashesha, who joins in to give us a better picture of the steel demand scenario in India as well as worldwide. Over to you, Ashesha.
Well, yeah, so the World Steel Association has gone ahead and cut its outlook, steel growth demand outlook for the full year from 2.3% earlier. They've cut it to 1.8%. They say infrastructure and construction is witnessing the impact of high inflation and higher interest rates. Recovery in auto production, however, continues to remain strong. This is on account of strong order backlog and on account of easing bottleneck, and hence auto demand continues to remain strong. World steel demand is expected to slow down to 1.9% in the next year, in calendar year 24, and these growth estimates are led by demand growth from across the world excluding China. As far as India is concerned, they continue to say that India remains in a bright spot. Surge in construction activity, government spending on infrastructure, increased private investment is what makes them bullish on India. So Indian steel demand continues to remain robust. Indian steel demand grew by about 9% in calendar year 22. However, the growth slowed to about 8.6% in the current year, is estimated to slow down to 8.6% in the current year and further slow down to 7.7% in the calendar year 24. Centrum, meanwhile, has come out with a note where they say that China to remain uncertain depending on the policy direction in order to tackle their economic challenges. Developing nations excluding China remain resilient to global headwinds. All in all, for the full year, World Steel Association has gone ahead and cut its guidance, but Indian steel demand continues to remain strong.
Thanks a lot for that. Sanjeev Bhasin is ready. Let's say hello and good morning to him. Bhasin Saab, good morning.
Good morning, Nikunj. Good morning.
मैच तो पुणे में आप दिल्ली बैठे हो. दिल्ली में जब मैच हो रहा था बॉम्बे बैठे हुए थे, क्या हो रहा है ये?
अरे आपको दिल्ली आना है भाई. This is the best weather. The weather has suddenly turned in the last 2 days, and I can tell you.
I was there last week, sir. And trust me, the whole night the air conditioner was on. काहे की दिल्ली की ठंडी कुछ नहीं है.
He said last 2 days.
Last 2 days, is it?
Yeah.
Okay.
Last 2 days. Nikunj, you don't need the AC. and the weather is really signaling that better times are just round the corner. So yes, all eyes will be on Pune. I'm there next week. But in the meantime, it's my fast. So I'm at home and in Gurgaon. And you're most welcome to make it here maybe in the next week, where we can actually sit and enjoy the weather along with the markets. Markets are now pricing in all bad news. So I am very, very optimistic that India is going to be the outlier. And as these geopolitical, vibes get little softer, you could see India definitely outperform.
Out of the 4 numbers which came out yesterday, the 4 big ones, you had Wipro, you had LTI Mindtree, you had Bajaj Auto and IndusInd Bank. Which one is a standout?
Well, except Wipro, all three. I mean, Bajaj Auto was always expected. The stock was hitting new highs. Their margins, their new outlook, and the growth trajectory is very, very strong. And by the way, rural incomes are just picking up. LT Mindtree, again, the order book seems very, very smart. And this stock still trades at a reasonable discount to the large caps despite being in the Nifty. But I think IndusInd Bank has taken the cake, given that lending on the two-wheeler or the four-wheeler side has been very, very strong, and their net interest income and margin both have expanded. So I think the numbers are very, very reasonable. You will take it in a pinch of salt that most of these stocks have also run up in anticipation of that and a day or so of profit booking. But overall, if you ask me, Nikunj, the earnings trajectory till now has been a beat.
Right, let's move right on and focus in then on IndusInd Bank. A healthy set of numbers in Q2. Revenues, profits, both came in line with the street was penciling in, with a 23% rise in the profits on a year-on-year basis. Let's understand a little bit more about the fine print. We've got Somit here who joins in with the details. Somit?
Well, in case of IndusInd Bank, if you see, brokerages have maintained that bullish stance on the bank. In fact, brokerages like BofA, Jefferies and Kotak have in fact increased their target price as well on IndusInd Bank. Now, BofA says that they're seeing a healthy loan growth momentum when it comes to IndusInd Bank, and they're expecting stable NIMs and credit cost in the second half of financial year as well. Macquarie continues to believe that IndusInd Bank can deliver a return on asset of close to 1.9% due to its high margin structure going forward. Jefferies is expecting a 21% profit CAGR from IndusInd Bank over FY23 to FY26, and they believe that IndusInd Bank continues to remain on the top picks also going forward. And for Kotak, they believe that the cyclical tailwinds will reduce the credit cost, and it is a credible positive investment thesis when it comes to IndusInd Bank. But the other positive news coming in for IndusInd Bank is that they had disclosed their second quarter shareholding also yesterday, and as per the shareholding data, the FI holding in IndusInd Bank has decreased to 62.6%. Now, because of this decrease in FI holding, the foreign available room investment room for FIs have increased to 15%, which means that IndusInd Bank could now get included in the MSCI Standard Index in the November 2023 review. Now, this review notice will come out on November 15th, and the flows are expected to come in on November 13th. And as per brokerages, IndusInd Bank has now a high possibility of getting included in the MSCI index. Now, they're expecting inflows in the range of around 250 to 300 million US dollars when it comes to IndusInd Bank, and on the back of both these factors, IndusInd Bank would remain in focus.
Okay, IndusInd Bank could remain in focus. Pathin Saab, IndusInd Bank perhaps is one large bank which has no large subsidiary advantage. Axis has moved into insurance, their security business is big. ICICI Bank has got multiple subsidiaries. HDFC Bank now has multiple subsidiaries. IndusInd Bank is the only one which is a pure vanilla banking business per se. So what should one do? Look at umbrella offerings or look at an independent bank?
Yeah, good point. So I would definitely take HDFC as a slightly longer term standout, given its subsidiaries and the other businesses and the parent business, which is doing extremely well. Just like I told you, it trades at now much less, on a price earning, even less than ICICI Bank or close to that. So I would definitely, but IndusInd, Nikunj, purely on the back that it is owned by the Hindujas. They have actually put their money where their mouth is in the last 2 years. And now with succession issues over, it is definitely going to get more market share. You've seen their new ads and the new type of wealth management business which they are focusing on. All that could be an added advantage. Plus, I think we are at the cusp of a season where I think private banks will actually lead the index. Actually, I think the bank Nifty is going to be one of the forecasters to rise, because I would expect IndusInd and HDFC Bank, both underperformance to be over. And I would say PSU banks could take a little breather. So IndusInd and HDFC both are buys around this period or on slight declines.
Naresh, construction stocks have done very well of late, starting from in BL Kashyap to in Ahluwalia. I can throw in IDT cementation. Is there a trade in any of the construction stocks now, Naresh? I mean, everybody's bullish on infra, everybody's bullish on road, everybody's bullish on real estate. So then the big beneficiary would be construction companies, what we call in Hindi thekedars.
So one by one, we've seen that it started off with NCC, HG Infra. Those were the leaders before. And now we are seeing new leadership come up. So even a Jaikumar Infra yesterday hit a new 52-week high. Then you have the two names which look interesting right now is a KNR Construction. The stock was one of the best performers in the earlier cycle in 2014 to 2017. Then in 2020 to 21 also, then it has gone sideways for the last 1 year, consolidating around the 270, 290 mark, high volumes in the last 2 months. So this is a stock which could break out, good risk reward here. So first would be KNR Construction. Second would be an older name out of the sector, which is IRB Infra. Now this stock has gone sideways again from 2021. And also if we go back to the highs it made, it was around this 31 mark, 31, 33 mark back in 2010. Was at 30 back in 2014 to 2018. And now finally the stock has given a multi-year breakout above the 34, 35 mark yesterday. Very large volume. So this could be a stock which could outperform going forward. A relatively high beta name compared to a KNR Construction. So a good combination to have. So at current levels, I would go with KNR Construction and IRB Infra.
All right, thanks very much for that, and thanks so much for joining in, Sanjeev. Let's also get on board then Hemang Jani. Hemang, let's get in your thoughts then. Jeffrey's note on Paytm, they're pretty bullish, saying that the growth momentum is only going to continue. What's your outlook on Paytm? Do you just ignore some of the ups and downs that they've had because the long-term prospects look strong, or is it an avoid?
Yeah, good morning. So Paytm, we have been having positive view for a while, and our take is that on a monthly basis, the user base is expanding, and more importantly, the path to profitability is looking much better. So when you look at the loan products, the wealth and financial services vertical, there we are seeing a good amount of traction, and once that achieves a certain scale, the overall contribution to their profitability will grow big time. So I think Paytm, despite the challenges of disruption from Geo Finance and maybe a few other companies, the fact remains that it's a formidable player, and we think that there's a case for a 22% kind of an upside from current price point.
The trigger, I mean, Geo Financial is around the corner. The fact that they have a path to profitability is something everybody knows. What would be that new trigger, Hemang, now for a Paytm or a Zomato? Because whatever construct we are discussing, everybody knows it, that they've been the survivors.
Nikunj, I think what market would like about Paytm and Zomato is the fact that the operating matrices are improving month on month. You have all the data points, the user, and the way they've gone about, let's say in case of Zomato, the subsidiaries part, they've been able to kind of curtail the losses, and the core offering is getting better. The user base is expanding. Paytm, if you see the loan products, the wealth product, the growth is evident, and it's a very profitable business. So I think once you see that happen in front of you, that gives you that confidence to participate in that story. There are not too many players. Even in this space, the platform space, you will not have 3, 5, 7 players. You will have at least 2 or 3 players. So whoever is the leader, people would want to participate there.
Let's just get some chart checks going, Hudko, and we saw the OFS news, and yesterday the stock price, Kunal, fell flat 10%. It was a kind of decline, and there was also MMTC that had a pretty rough run. What exactly are the charts looking like?
See, it looks, that we've always advised that, these are the kind of names which can move up in a hurry in a short span of time by a margin of 30-40%. But then when they start to get into a correction, exiting these stocks becomes a lot more tricky. These stocks also fall, flat on their nose. And I think that's exactly what we saw for stocks like MMTC, ITI, etc. yesterday. So I would probably expect that this could not just be a short-lived correction. This could be a series of negative trend or negative days for many of these stocks. MMTC, just for a example, I think 2 days back when the stock was at 88 levels or 89, the 200-day moving average for the stock was 37, which means that the stock is at a divergence of more than 200% from its long-term moving averages. And such kind of aberrations, they don't sustain for a long period of time. And whenever there is a mean reversion process, where these stocks correct and come back to their means, the corrections or the mean reversion is very, very sharp. So I think even in that aspect, I would actually expect the stock to maybe come back towards 60-65 levels, which could be a correction of another 18 to 20 points.
Okay, That's interesting. And the government is going to exercise the green shoe option as well when it comes to Hoodco. But cement, and we've been discussing this space day after day. It seems like there has been a lot of news flow as well with respect to the price hikes, and that has been absorbed rather across the board. What's the viewpoint from a stock standpoint, Hemang, within the entire cement basket?
Positive view, I think price increase is something that people will have to deal with. Even the way the input prices also have gone up. The overall dispatch numbers continue to look good, and we think that in next 2 or 3 quarters, cement will be one space where you will see a combination of earnings growth with some M&A activity. So I think both large cap and mid cap companies in cement should do well. Ultratech being the preferred play, and some of the mid cap names, with JK Lakshmi, Dalmia, Bharat, Ramco. I think these stocks continue to have a positive bias.
Kunal, I think you bullish on ACC yesterday, right?
Yes.
It still looks good.
It still looks good, Nikunj. In fact, many of the cement stocks are actually showing signs of strength for themselves. Ultratech Cement, for example, has been looking quite sturdy. You've seen outperformance coming in from other larger cap cement names. ACC, apparently the stock has been holding on to its 50-day moving average since the last 1 month. There was a mild bit of volatility in between, but then the stock has managed to absorb that quite well and come back towards its 50-day moving average. So I think even after yesterday's downtick of 1.5%, still looks very attractive purely in terms of the risk reward and that slight defensive nature or maybe a low to moderate beta nature of the stock given the kind of market we are into.
I want to go back to the bond yields. We are walking up into trade this morning and the 10-year bond yield is, it's almost at 4.95. So we've gone back to that pre-war level. So that's the irritant. I mean, if you're frankly looking at one cross which could just peg us back, which has been pegging us back, would be global cues. Now what will happen because of bond yields at 4.9 and dollar index at 1.6 and a little bit of flare up in commodities, in the short term, which is when you wanted a little bit of push to come from an HDFC bank or a Reliance, ain't going to come. Market will always chase performance, or markets will start bottoming out when valuations start looking attractive. But for that, flows have to turn. And normally when you see a combination of rising bond yields and a weak dollar index or a strong dollar index, I beg your pardon, weak works the other way around here, then flows in the near term, they always get challenged. So you could see a situation where flows in a sense could get challenged, and by the way, gold's moved up 6%. So classic risk off in the world. Yields are up, dollar is up, gold is up. Classic risk off. Naresh, this is a classic risk off. As of now, it looks like a one-day effect, but could this snowball into something more and bigger?
So as of now, we are in a flux across the world, whichever asset we look at. So gold, for example, has topped out in 2011 in terms of US dollar, and we've still not gone back to those 1950, 2000 levels and breakout, irrespective of whatever has happened in the last 10 to 12 years. So we keep seeing this short-term moves wherein gold becomes a risk-on move, risk-off move. But essentially, if we look at all the indices also, whether it is a European index or a US index, or a Japanese index, everything is in a range-bound move. So for now, we are trying to find a trend, but there is none across the board. So it's just time to wait for more confirmations of a possible hypothesis, whether it's a risk-on or a risk-off. As of now, not really able to find a clear trend across various indices.
10-year bond yields is the story according to me. Hemang, what is your understanding of the interplay between bond yields, crude and gold now? Because now there is risk off, it's not risk on now.
So Nikunj, I think crude prices, we've already seen how they have really gone up in the last about 3 to 4 months, but markets have continued to remain resilient. Also, the bond yields, yes, US 10-year bond yields have really shot up, and even in India, post last RBI credit policy, they have gone up by about 10 to 12 basis points. I think what market would really focus upon is, particularly from Indian context, when the bond yields are going to peak out, and more importantly, you will see a divergence between the performance of the large cap and the mid cap, because even if you see the global markets turning a little adverse and you see the sell-off, that will be in the large cap space. But given the way the dynamics are playing out for mid-cap and small-cap companies, wherever the earnings delivery is strong, I think even when we have slightly higher bond yields and the crude prices at a higher level, I think that part of the market will continue to see certain traction based on the earnings, etc. So I think one will really have to play this entire period, taking a very stock-specific view and focus more on the broader market.
Then when it comes to Bajaj Auto post its kind of quarterly numbers, given that the management as well has spoken about how the three-wheeler business has done well, they're looking at positive domestic festive sales this time around, and that their industry growth guidance has been maintained. Hemang, that's for you.
Bajaj.
Yeah, go ahead, Hemang.
Yeah. So Bajaj clearly the EBIT margin there was a beat, and more importantly, if you look at the management commentary, both on the domestic side as well as on the export front, things are getting a little better. And we think that the newly launched Triumph has started delivering almost about 8,000 units in the second quarter. So things should get a little better. And there is also a case of some market share gain for Bajaj Auto given the premiumization and the opportunity for export. So we continue to have a positive bias there, and the target price being 5,225.
5137 for Bajaj Auto. Who would have thought that this would be a year where Bajaj Auto actually will make a comeback? And that really makes it a very interesting case in terms of Hero Honda versus Bajaj Auto. They were almost neck to neck in terms of performance. But TVS right at the top, Eicher somewhere in the middle, and Bajaj Auto has really spotted. I mean, look, their export is not doing well. But Bajaj has this very unique thing, which I think Hero has failed, which is that every 5-7 years they've added another wheel to their earnings. A scooter company added a motorcycle. Then from motorcycle, they became from a domestic player to an export-dominated company. Now they're looking at adding Triumph and perhaps other, bikes which will not have impact on the balance sheet per se. And then you got the e-wheeler business which is coming. For Hero MotoCorp, what's been the story? They split with Honda. They did not do anything in exports. They don't have presence in EV. They never ramped up or never challenged Eicher's dominance in the luxury because they thought it was too small. And now that rural, things have hit them, they've also struggled to come up with something which could be called as a premium biking experience. I mean, Harley Davidson is here and there, and that's not going to move needle for a company like Hero MotoCorp. So, markets are very smart, and markets tell you which way things are. Hero MotoCorp versus TVS or TVS versus Bajaj. The stark underperformance in Hero MotoCorp, I think, is very, very evident. But the other one, I think, is Maruti. And Hemang, it was always Maruti and never Tata Motors. Now suddenly it is only Tata Motors, no Maruti.
Yeah, so I think both of them have done well. Tata Motors, more so in the last about 6 to 8 months, has really surprised everyone because of the way things have turned around on the JLR front. Even domestic market, if you see the CV part, they've done exceptionally well. PV, they are really putting in a lot of work. We can see more and more EVs from the Tata Motors side, and that is surely positive. I think one thing I would like to add here is that Tata Motors, because of this IPO of Tata Technology, people are double counting the possible impact. In the SOTP value, about almost 20 rupees per share was already factored in. And now, because there is a deal or there is an IPO, we cannot keep on increasing our target, because that is already factored in. So I think we should be a little mindful about Tata Technology part, but the core business, Tata Motors, is looking quite good.
Okay. Do you have a question?
Well, no, yes, I do. I was going to ask about his outlook when it comes to some of the other, auto ancillaries, some of those stocks like a Seat, Apollo Tires, etc. What would be your outlook, Hemang, when it comes to those stocks from a fundamental standpoint, largely owing to the raw material prices, etc.?
If you look at the performance of Apollo Seat this quarter, it's exceptionally good. But what is important is that from here on, you will not see incremental growth because of the way the raw material prices have moved, and somewhere the base effect will start kicking in. And the stocks have really run up big time. So I would avoid a C8 or a Apollo Tire at this point. Maybe at a correction of about 10-12%, relook at it.
Question.
I have a question. I always have a question, you know. See, Avan, you're forgetting we anchors. We ask questions for living, right?
Exactly.
कहते हैं ना पेट के लिए सवाल पूछते हैं. To put it very simple. And Himang Jadni does the reverse. He always answer questions, right, Himang? पेट के लिए जवाब देना.
Yeah, I answer the question, but Nikunj, I'm a little worried about the googlies you throw at me, you know.
You know, I hope there is no googly in the cricket match today, my friend. I'm more worried about that, given what is happening to, you know, what's happened with some other dark horses, so to speak. I'm worried about the googlies in Pune today. Bangladesh actually has a good spin attack, right? Right, Naresh? They have a spin attack, right? Okay, you guys don't track cricket. You guys don't track cricket. Okay, we'll talk about it after the cricket match. But right now, the googly, I think, really has happened in some of the banks. When numbers are supposed to be strong, but markets have not really kept up pace with what the numbers are. Himang, how much of the current setup is pure compulsion in nature? Everybody is of the view that you should not buy, you should not sell HDFC Bank. Everyone is of the view that Kotak Mahindra Bank is cheap. Everyone is of the view that banks will do very well. But yet the underperformance now for this year per se, it's not been 1 day, 1 month, 1 week, 1 quarter. It's been almost a year now where banks are underperforming.
Yeah, so specific banks, let's say HDFC Bank or Kotak, they definitely have underperformed. But I think Bank Nifty or the banking sector overall, you know, if you leave aside last 2-3 months, over a period of, let's say, about 6 to 12 months, has done reasonably okay. What is very important is that even when you see the bond yields going up, over ownership, large sell-off by the FIIs, they are able to absorb that quite well, unlike earlier periods. So I think you may see a little bit of underperformance, but whenever you see corrections, that will be a great opportunity. HDFC Bank also, we had a mega event. I think nobody probably had thought of such a big merger come through and intricacies around it. But I think the price has settled. So yes, it will taste your patience, but at these valuations, last 15 years lowest, with a 16-18% growth visibility, I think it makes sense to kind of have positive view at this point.
ITC, Naresh, we've just gone off the radar on this one. Today it's the number day and it could be a swing day for ITC. Is there a trade in ITC, HUL or Nestle for that matter? Naresh?
So a defensive tilt being seen in a lot of stocks now. So ITC, the case is if it can sustain 460 post numbers would be a clear buy. For the last 2 months, it has been very sideways. It topped out on the good news and corrected from 500 levels all the way to 430 to 440 band. So 460 is the price point which I would be watching out for. That was the high roughly for August 455. The high for say September was around 457. Yesterday, it topped around 458 levels. So if it can cross 460, it could be interesting for a short-term trade. If it does not, then again, it continues to be in the sideways range. So in terms of FMCG, we are seeing a similar structure. Britannia has been sideways for almost 2 months. You have HUL around that 2500 mark. So I would be watching out for ITC as well as Britannia if it can make a move.
Let's address earnings and just so many of those. Let me welcome on board Inder Jaisinghania, the CMD, and Gandharv Tongia, the CFO and ED at Polycab, joining in to talk about their numbers. Gandharv, hi, morning. If I could start the discussion with you. Strong numbers. PAT was at your highest level ever. Was the growth driven by volume or pricing? And what really is the outlook going forward?
Thank you for having us. This is one of the best quarter in the history of the company. We did close to 4,200 crore rupees of top line and a bottom line of close to 430 crore rupees. This is on the back of volume. The volume growth is in the vicinity of around 30% in the domestic business. Exports contributed almost 9 to 10% to our top line. And as you remember, we started working on an ambitious transformation program called Project Leap, and we are now reaping benefit of that particular project. It appears that second half is going to be better than the first half. Just to give you context, the first half top line is close to 8,000 crore, which is better than the top line of fiscal 19. And the bottom line of first 6 months is better than the annual bottom line of fiscal 21. So there's a tremendous amount of growth which company has registered, and under Project Leap will continue to aspire to get to 20,000 crore rupees by fiscal 26 or sooner.
So margins have also shown a good expansion going forward on the back of commodity movement and operating leverage. How are you looking at your margin picture now?
So at the company level, our EBITDA margin are generally between 11 to 13%. In the recent quarters, it's slightly better than 13%. We believe the sustainable margin is somewhere around the similar vicinity of 11 to 13%. And if we are able to take benefit of operating leverage, it can touch 14%. As far as FMEG is concerned, we are making a lot of efforts. We believe we should be able to get to 10% of EBITDA margin by fiscal 26. We are working on premiumization. We have introduced new products within the key businesses, like, for example, fans and lighting. We have also relaunched our logo and done a brand refresh. This will help us in getting closer to B2C customers and bring more insights. We believe both B2B as well as B2C, in addition to exports, will continue to drive our growth at the company level, both for the top line as well as for the bottom line.
In your FMEG segment, which has better margins than wire and cable, can you share the outlook there as well, please?
That's right. So when we talk about B2C businesses, we have broadly two businesses. One is a retail wire business, which has registered a fair amount of growth, which is also very profitable in comparison to traditional B2B business. As far as FMEG is concerned, we have businesses like fans, lighting, switches, and switchgear. Within that, switches and switchgear has registered a very good and impressive growth. Lighting at the industry level is facing a bit of a headwind. And on fans, because of the recent changes with the regulation, it is expected that in the coming quarters, the industry is going to perform better, and we should be able to take benefit of that particular momentum.
What about the outlook going forward? Are you likely to continue with better than industry performance?
That's an interesting one. So as part of Project Leap, we had decided that we'll have a target of 20,000 crore rupees or 200 billion by fiscal 26. In the first half, as you know, we have already done 8,000 crore rupees, and we believe that we would be able to comfortably achieve that guidance by fiscal 26. It's quite possible that we are able to achieve it sooner than fiscal 26. As far as EBITDA margins are concerned, in cable and wire, we'll continue to play in the similar vicinity and range in which we are today of 11 to 13%, or in few cases, probably 14%. On FMEG, as I mentioned a while back, we are trying our level best to improve both the top line and bottom line. And in the coming quarters, we believe that we would have good news coming from that side of the business.
Okay, Inder, Gandharv, both of you, thank you so much for taking the time out and joining us and talking about your earnings. The stock, of course, since listing has already moved up over 100%. Let's see how it reacts to its earnings and whether you see further momentum. Well, looking at the pre-open rates, it seems like it's going to definitely be a step back. What about the mid-cap end of the market? Will that manage to hold on to gains? Let's get in some trading ideas from both Kunal as well as Naresh. Naresh, what's on your list?
So that's a buy on KNR Construction. The stock has been consolidating around this 270 to 290 mark. Earlier, 270, 75 was a resistance for the last 1 year. Gave a breakout, but still consolidating here. Volumes have increased in the last 2 to 4 weeks. Should be a short-term breakout about 290 levels. So buy at current levels, add more about 290, looking at a target price of 320.
Right. Kunal, what about your mid-cap strategies?
I'll go with the contra buy on City Union Bank. The stock has been beaten down significantly, but in the last 3-4 days, the stock has shown some bit of resilience, a bullish flag pattern on the hourly chart for City Union Bank. Puts it as a buy with 155 as a target, stop us at 135.
Well, the markets may be doing what it's doing, but it's officially the festive season, and festivals are not just about colors, lights, networking, but also about food. And it's the biggest food festival here in India, at least according to specialty restaurants, Anjan Chatterjee, who told us about what really is on the menu this Navratri and Durga Puja season, but he also actually cooked for us. So stay tuned, a very special chat with the founder of brands like O Calcutta, Sweet Bengal, Mainland China. That's coming up for you on the show later today.
It's festivities galore and the city is decked up for Navratri and Pujo. These celebrations hold a special place in the hearts of millions of people. What better way to delve into the traditions, the flavors, the business of the festivals than by engaging in a conversation with chef-turned-restaurateur, Mr. Anjan Chatterjee. He is the visionary behind specialty restaurants.
I'm going to make a malai curry. As you see, we put some basic groundnut oil. We will just first fry the prawns. Shubho Devi Pakko, and may your Durga Puja will be very enjoyable and happy.
Yummy, yummy. My mouth is watering. Patricia, where is our little treat that you got? Yeah, we want to try some. Okay. We'll hold Patricia to it. But that aside, let's move right on then. By the way, that's a pre-open rate on the back foot. No surprises there. 19,500 actually. That's down about 130 points. But let's find out what the khabar is on D Street. India Pesticides, that's in focus. And we've got Vinny to tell us what exactly the khabar is. Vinny?
Good morning. So yes, we're keeping an eye out on India Pesticides today because we're seeing a lot of buying coming in from institutional players on account for the counter as well, and it's coming in from different broking accounts as well, is what we're understanding. Furthermore, we're seeing huge volumes for India Pesticides in the last 5 days. Let's not forget that India Pesticides is not a stock that has actually seen a lot of fall in this market fall that we've seen coming in. India Pesticides has not seen that much of a fall coming in. Let's not forget, recently they also bought land in a UP for a new plant that they're setting up as well. So they have plans in terms of the capex over there as well. And the company as of now is debt free. The promoter is holding around 65% shares with a no pledge on it as well. So this is the news flow that we're seeing a lot of buying coming in from institutional investors as of now for India Pesticides. And this is despite the fall that we saw in the market in the recent time as well.
Okay, that's the khabar. Look out for what India Pesticides does in trade. But what's the take on FMCG, considering that's that one sector which is going to be in focus on the back of ITC, Unilever as well as Nestle numbers? Here's Nikunj's take on the same.
See, HUL has done nothing. Yeah. We don't realize it, but HUL in the last 2 years actually has been a flat stock. So valuations are... So the stock has surely underperformed. And ITC has been a massive outperformer, but it is cheap. Nestle is up some 20-22% this year, but it is trading at 64-65 times. So I think if you're really looking at the bent of the market, I mean, from a market standpoint, I think ITC numbers are going to be of immense importance. HUL, nobody's expecting any fireworks from there. And Nestle also, I think the stock outperformance is only on the promise that things in the milk basket are coming down, things could look up in there, things really could look up because they are on a cusp of a major expansion. What Nestle has expanded in its entire existence of India, they're looking, whatever they've expanded in terms of the capex commitment, I think they are committing to that kind of an capex commitment in the next 3 years. So what they've done in 100 years versus what they will do in 3 years, I mean, there's a bit of inflation at play here, but numbers are numbers. So that is the kind of commitment they have. And that is the reason why the stock's done well. This is not a basket which will surprise you. I mean, this is not something which is market moving. This is something which will be of good academic interest, maybe upgrades and downgrades, but it's not going to be a market moving number. I mean, from a market standpoint right now, it's global cues, technicals, bank Nifty, and what is happening to the dollar yield. So these numbers may not just do anything.
But Nikunj, if FMCG earnings are not going to do much, IT earnings clearly have disappointed. Financials, we have seen that the performance was okay. The stocks were not getting any positive momentum. Even the large cap bank names, where will that next leg of rally come from?
So why do you think rally is not coming?
Yeah, but like if we do
Even
have to
Bajaj
go,
Finance was the top Nifty loser
yeah, with
yesterday.
a 30% growth, if you're getting a slide of 3% on the stock, I'm not sure what the street is penciling. And does this mean that we have topped then?
So Anisha, you are still growing at 10 to 12%. Now the scope for P expansion from here is going to be limited and restricted. So now it would be the aggregate numbers, which in a sense, which would be a combination of IT, banks, see FMCG companies will grow. It's just that these stocks are expensive. So on an aggregate basis, you're still going to get 10, 12% earnings growth. Inflation is coming down. The macros are favorable right now. So to expect that we're going to get 50% return, I think is not going to be there. But since the earning trajectory and valuation comfort in large cap stocks is there, from here, given that we come on the right side of what markets want from an election, it will not be a tall order to imagine that you will be in for double-digit return from here till next October, assuming that markets get what they want from the election. That is a binary event, which I'm not so sure how markets will react to.
Okay, there you have it. Those are some stocks on the editor's radar, but let's find out what the index calls are. Just about a couple of minutes to go for the market open this morning. And given the kind of rout that we witnessed overseas, as well as the fact that you saw quite a move on the 10-year bond yield as well, you've got an avoid. That's the call on the Nifty this morning, given that the pre-open rates as well are indicating that it could be a shaky start. But hold, says Nuresh. So divergent views from our chartists. The Nifty Bank Index this morning, same view from our chartists, avoid and hold.
Okay, just getting set for the market open this morning, and definitely after, or rather in continuation with yesterday's move, the fact that we slipped to the lows of the session yesterday, dragged lower by financials and banks. Bajaj Finance, remember, an inline set of numbers, but that still got dragged lower, and you had an almost 3% cut coming in on Bajaj Finance. So that's definitely one stock that I want to revisit today as well. It's a little bit tempered, 78.44 on Bajaj Finance this morning. And then, of course, there was an Axis, there was Reliance Industries, HDFC Bank. The blue chips were the ones which pegged us back, and it's a red pretty much across the screen on most of these names today as well. While today, of course, you'll have some major FMCG numbers come by. There's lots that the street is going to be reacting to as well. Bajaj Auto definitely has been a big beat today. So that's one earnings that you may want to look out for. Not just that, you've got a beat coming in from LTI Mindtree, surprising as it may be, or outlier for that matter within the IT pack. That number has managed to impress the street on all counts. LTI Mindtree holding up by about 1% in the pre-open rate. So lots of earnings that are going to be in focus, and I can see there's a big move up on IndusInd Bank as well, at least in the pre-open rates. But again, the overall construct of the market, Nikunj, right now, it's not just falling prey to earnings, but also the global scene is looking a little bit wobbly right now.
Yeah, that's the, shaky part, that you've had a risk-off day. Will it be a risk-off patch? Very difficult to take that call in isolation, because let's say the reaction of the market to geopolitical issues has been slightly late. Just when it appeared that bond yields globally will peak out, they've started spiking up again. Crude was always getting ready for some kind of a linear decline. It has bounced back again. So it's looking slightly hard to predict the feel of the world. And the breadth also is just in sync with what is happening to global equity markets. 496 advances, 951 declines. So it's turning out to be a bad day and a poor day of trade, irrespective of the cut you look at. Small cap, mid cap, large cap, irrespective of the cut you look at, it's turning out to be a rather feeble start with a downward bias. Now let's address the newsmakers. LT Mindtree, Wipro, Bajaj Auto, and then IndusInd Bank. All four numbers, Nifty 50 numbers, came out with numbers in the second half. And Bajaj Auto has hit out of the park, 122 rupees higher for Bajaj Auto. IndusInd Bank, the numbers are not bad at all, and there is an MSCI inclusion which would be at play, which is helping the stock today, 26 rupees higher for IndusInd Bank. And then let's top it up with what you've got in terms of I mean, the fourth one was LT Mindtree. So let's top it up with LT Mindtree also. What do we have in terms of a market reaction? And the market reaction, this one is going against the grain. But is it a good idea to buy a stock when the sector per se is not in a great shape? So that's a market breadth for you. Little bit of reaction to earnings. That's about it. Nothing major, nothing large, nothing alarming, but nothing exciting.
Yeah, that's really the picture coming in across the board. Couple of other names which are going to be in focus. We've already flagged off what Indocent, Bajaj Auto are up to, or for that matter, even LTI Mindtree. Persistent as well came out with their numbers. The constant currency revenue growth is above estimates. The deal wins are at a record high. So look out for Persistent as well. That's definitely moved up smartly, 2% higher on that stock. This Coforge as well, which has maintained its FY24 constant currency revenue growth guidance. The dollar revenue is above estimates. So some of these outliers from within the mid-cap IT arena. ICICI Lombard as well, wherein the gross direct premium incomes have come in higher by about 17.5% nearly. Profit is up 2.2% on a year-on-year basis. That stock as well has moved up 3% as we speak right now. In the meantime, Bandhan Bank's numbers were below estimates. The asset quality as well has seen a deterioration. So look out for what that stock is doing. 3.5% of a gap down for that one. And then, of course, there's a Shoppers Stop. There's Dabur as well, wherein the litigations against 3 of its subsidiaries in the US and Canada have actually come out. There's Wipro, of course, which has been a dampener too. So all these are earnings reactions coming in. Before we take it across to Nilesh Shah from Envision Capital, I quickly want to take it across to Kunal and Naresh and get in some first trades going as well. Kunal, firstly, a word on the index.
Well, it doesn't come as a surprise that we've opened down 0.5% to 1% approximately for the indices. Would expect the index to remain under pressure at least for the first half after trading today. But in terms of outperforming sectors, Maruti is something which I would pick up in terms of the opening trade. Auto stocks still look very strong, and many of the auto stocks have confirmed a breakout for themselves. So Maruti is one of the names which I'll be bullish on.
Naresh, what are the first trades or trades that you're punching in?
So being defensive like Sun Pharma, this could be a stock which could play defensive as well as break out in the short term. So expecting that to take a move towards 1200, 1250.